Good morning, everyone, and welcome to today's Trading the Markets Live. Let me just take this down. Sorry, just bear with me 1 second. Let me see. Okay, apologies for that, guys. There you go. Okay, so welcome to today's Trading the Markets Live here at the LiveTradeRoom. Now we're focusing on trading the European Open, and today now is Monday the 3rd of September. So you're all very welcome. What we look to do during this session is to look for high probability trading opportunities, obviously during the European session. And what that will allow us to do is really focus on, I guess, some of the structures that we can identify in these markets, and identifying really strong, high probability moves. Now, we've got a methodology that we use to identify the opportunities. We use multi-time frame analysis. We then need to go through a bit of a process in terms of how and when do we execute a trade in these markets. So we have an approach that we can consistently apply to achieve that. Then, of course, it's about your trade management. It's about the decisions you make in terms of defining what the market is doing and determining effectively whether you need to mitigate loss or even look to book in profit at certain points. So we'll go through the whole experience with one aim, and that is to book in profit on a consistent basis. So, we've had some interesting summer trading markets, that's for sure. Volume is obviously on the lower side, which is no major surprise. So it has meant some sort of interesting opportunities, but a lot of them occurring at unusual times. So we're really looking forward to the, normal trading conditions where the market is back to full tilt. Okay, so what we're going to do is we're going to start with just our risk warning. As always, please do familiarize yourselves with the risks involved in trading these financial markets. And without further ado then, it's important that we understand the news flow for the day. So we do want to have a quick look at potential market moving news. So for this, we'll get up Forex Factory. A lot of sort of geopolitical risks, a lot of factors to be aware of. I suppose the first thing from a volume perspective is the fact that just at the bottom of your screen here, it's a bank holiday in the US and Canada. So for the US session, that is very likely to impact. In fact, it's very likely to impact the markets full stop, just because those trading these markets will be fully aware that the volume will be less. So therefore, we might not see the explosive moves potentially that you can normally see on a normal trading day. So do bear that in mind. In addition, what we're looking for is high impact news events. So we've had a significant news event impacting retail sales, impacting the Australian dollar. Of course, retail sales is an important economic indicator to reveal the strengths of an economy, and if retail sales take a bit of a hit, then no doubt it's a little bit on the concerning side. So there was an expectation of 0.3, and we actually got a 0.0 on the retail sales figure. But as you can see, it can be prone to erratic kind of drops in retail sales. So we'll have a look at the Aussie dollar shortly. Also, we had Kuroda speaking, which is the governor of the Bank of Japan. He's commemorating the 30th anniversary of stock index futures trading in Tokyo. So it's more of a commemorative event. So nothing of any significant concern you wouldn't imagine. And then finally at 9:30 this morning we'll have manufacturing PMI. So that will impact the British pound. So we'll see. You can have a look at the state of the PMI, the manufacturing PMI number, on a bit of a sort of a pullback, so to speak, but relatively strong. And that's effectively it if we take on board the fact that it's bank holiday in the US and Canada. So nothing of any major concern, just some British pound news event, relatively minor in the grand scheme of things, impacting us at 9:30. And that's important if we get in to the British pound or a pound related market. Okay, so let's get up our trading platform, and like I've suggested at the intro, we look to identify high probability trading opportunities. So when we get to our trading desk, we need to have a means for us to be able to do that. And of course, trade selection is an important consideration when we trade. So many markets to choose from. How do we choose the markets that can potentially give us the better opportunities? That is the question that we need to ask ourselves. So we've got a way in which we can answer it. So what we're going to do then is we're going to go through the markets. We're going to look at daily time frames, and we're going to see if we can identify some of these high probability opportunities. So we'll start with the euro dollar. So we've had an interesting situation in a couple of markets where we've seen the dollar gap in strength. So in this case, it'll be gapping to the downside. So a bit of sort of a dollar strength beginning to kick in, and we can see that as well in a couple of different markets. I think it's a dollar CAD. Yeah, so we've seen the dollar gap to the upside. You can see that the previous close here was the 30.37, looking at the bottom left-hand corner there, the data window. And then the open of the next candle is the 30.70 level, with a close of 30.37. So we're talking about a 23 pip gap to the upside. So a bit of initial sort of market strength creeping in, a smaller gap, as you can see here, between Friday's candlestick and the open in the euro dollar. What we'd be expecting is continuation below the 15.84. Now, it'll only represent a high probability trading opportunity if we break that low. So it's obviously the daily low for Friday, but it's also a weekly low, and it can just add more gravitas to the trading conditions. So we're not looking to get into it above that level. So that's the important thing to take away. And what we must be mindful is a slightly slower environment today because of Labor Day in the US. So we've got this market procrastinating a little bit just above the 15.84. A break below that level would give us that high probability opportunity. So we're gonna look at a sell trade beneath the low, beneath this level, and you can see we're not too far away. We're only sort of 10 pips away from that level as we speak. And I'll go through in it just very shortly why it's such a high probability trade. Now, we would have liked to have extended the opportunity to sell this market below Friday's low, but now we've kind of gapped to the middle of nowhere effectively. So we've just gapped lower. So we do like the idea of the pound dollar to the downside. We didn't quite sort of fill the gap really to any great extent from Friday's trading. So I think we attempted to, but we don't think it's kicked in just yet. So it's worth us looking at the pound dollar. We just might have a couple of issues with consistent entries into that market. Looking at the dollar yen, we can see that the market is kind of trended to the downside, making new lows, and now we've seen a market as of last week just sort of reverse that biasness and potentially look like a bit of strength is coming back into the dollar yen. So what we like to focus on the dollar yen really to give us potential opportunities when it comes to the euro yen. See continuation to the downside and the pound yen. So this can really help us. So we'll come back to these two very, very shortly. But for now, we're not really going to get involved, but we will be referring to the dollar yen, I'm sure, on a number of occasions. The dollar Swiss, you can see that, again, the market is just ever so marginally gapped to the upside as far as the dollar Swiss is concerned. The Swiss has been very strong over the last couple of weeks, and we're getting a bit of a pause around these lows. A small bit of dollar strength coming in against the Swiss, but really a very, very small little bit of strength coming in. We're talking about 13 pips is the range between the high and the low. So there's no volume, there's no volatility at all. So bear that in mind. So we'll look for other opportunities elsewhere, because there is opportunities to be had elsewhere. The dollar CAD, an interesting one. We've now gapped to the upside. Again, there's no sort of range at all in the market. So again, perhaps a few better opportunities to consider. So we had some a negative news event in the Aussie dollar. Like if we look at this price action since January, we're looking for opportunities to sell this market. Now Friday's price action gave us an opportunity to get in below. Sorry, Thursday's low was the opportunity to get into the downside, but we were actually trading the euro and the pound, and the euro yen and the pound yen. So it was a good opportunity. We were concentrating on some equally high opportunity trades, because if you look at Friday's low, it's still got a lot of work to do. It's just how the trade sort of panned out over the course of the day. So we were just looking at better opportunities elsewhere, really. We expect it lower, but again, we've kind of got to cherry pick today, I guess, just because of the fact that the volumes are going to be somewhat on the lower side. So we can come back to that and just monitor it casually. We'd expect the New Zealand lower as well. You can see that we've already attempted to push back, and we've kind of pulled back just above the weekly low and Friday's low as well. So we're currently just kind of at that level as we speak. However, on a short-term basis, we do expect this market to squeeze lower. Euro pound pulling back significantly off the high. A little bit of potential strength creeping in, but nothing of any major concern. Now, the other two markets that we are quite interested in is a euro yen trade to the downside. So a little bit of strength coming into the euro yen. I'd like to just share with you my thoughts. Sorry, if I just get up my pen just for a second. So let me share my thoughts. So we've had this market just sort of create a bit of a double bottom at this level, which is fine. I mean, a double bottom is especially at this kind of level, is a really strong opportunity for this market to retrace and to bounce back quite significantly. But we've made a bit of a high here at the 130.86, and all this represents from this low here to this high is just a straight kind of pullback, as you can see. And now we're just beginning to get that roll around, and we've now got sort of a strong bearish candlestick, and we've got some follow through. So if we just step back and we just see this market in a little bit more detail, there's a suggestion that we are, as far as the directional bias is concerned, and it's important to have a directional bias on a much larger time frame. That's what we find lends itself to consistent returns, is to have that clear-cut understanding that what we're looking for is for this level to become a structural high, and for a bit of selling price action to come back in, at least down to the 125.40. This market may have a decision to make around that level, but as you can see, that would represent a really strong move to that level. So we do have a bearish bias in the dollar yen, so we're looking for opportunities to sell. And in actual fact, below Friday's low, which would be the weekly low as well, the 128.55 would give us a good opportunity to sell this market to the downside. So we're going to come back and have a look at that as well. The same thinking, pull back off the lows, making a high at 145.68, and now extending lower. So what I'm going to do is just mark the low in there. So there we go, that's at the intraday level. So we'll come back to this very shortly. We'll come back to all of these. So the markets that we're looking at on a 15-minute time frame is what we would regard as our high probability trading opportunities. Now, when we dig deeper at smaller time frames, we might be able to discount one or two of those trades. But we have this sort of methodology where we filter out the high probability trades. We zoom right in, see what's going on at those smaller levels, and see if an opportunity presents itself or not. So looking at the gold market, it's quite an interesting sort of situation. It looks like a bit of a bottom is being created here at the 1196.28, with a strong eye on the US dollar as well when we look at the gold market. So again, not much volatility, not much range, nothing to be concerned about in any way, to be fair, just yet. We're still likely to get a rollover to the downside, and the reason why we've got a bearish biasness on this is previous price action. So becoming a master of price action needs you to determine what direction the market is moving, and then look for the opportunities to get in line with that thinking. So looking for an opportunity to sell, which is why we're looking to get into this on a daily time frame. So we're looking to, for those of you that perhaps join us for the Capital Growth webinar every evening at 9 PM through the live trade room, you all know, why we're looking to get into this trade at this level. And we've been selling it, to be fair, literally since April, since we got this major breakout around the 1308. So we've had a few good opportunities in the gold market already, and we're simply looking to go with it again. We've had a really strong bounce off that level, and we just put our entry price in just beneath the daily low with the expectation for it to roll further to the downside. Okay, so moving on to crude oil. So what we'll do with the gold market, we'll come back and have a look at it, because if prices break below the 111.96, it represents a really good opportunity for us, but obviously not as things stand. The US oil is an interesting market. There's lots of sort of geopolitical developments ticking behind these oil markets. We have the leaders of Russia, Iran and Turkey due to meet this week. Obviously oil and the situation regarding the Iranian sanctions, which are due to kick in, and Iran have seen a decrease in oil exports in advance of the sanctions, and there's a lot of, I suppose, bullish outlook with regards to the prices of oil. It certainly seems to be, and of course there's concern that it could go both ways, but the OPEC do have some sanctions currently in place on the restricting the supply of oil till December this year, and there's talk about potentially, depending on what's happening in the price, those sanctions being kept in place if the conditions are okay for it, and potentially even being removed. So it's hard to say it's a clear picture, but what it does suggest is there's a strong emphasis and focus on the price of oil, and if those change, then that can be quite important. So if this market creates a structural failure and gives us an opportunity to push higher, we'd like to buy it, and if it gives us an opportunity in structural failures for price to move lower, then we'd like to sell it. So we just need to sit on the fence and just allow this market to determine what it would like to do. So for us to get into this market to the upside, what we would like to see is a really strong defined pullback, maybe in and around this level here, and then at that point we might take the next trade to get to the upside. Alternatively, if we don't get follow through for that, and we start, you know, getting a bit of a shallow kind of turnaround, it could create a low, and then we might look at sort of an opportunity to sell it if we can get an opportunity. So either way, we're not stuck to either buying or selling this just yet, because all we're seeing is a pullback off the 64.76, and we're now back up at the $70 level. So a really strong pullback during the summer markets, which is no major surprise. There's a lot of vested interests that want this price to push higher. It'll be interesting to see how these prices develop and unfold now over the next few weeks. So that's US oil. So if we move along then to the S&P, we've got prices just topping out really. We had a nice explosive move last week. They keep making higher highs. And now it'll be interesting going into earnings season as well to see how these markets will start to unwind. So as we flick through, there's a bit of bearish price action coming in today, as you can see, just literally across the board. They're the US equities. The FTSE is seeing a little bit of a bounce off the lows, the 74.17 level, which was quite an interesting level for us to see, actually. Excuse me, sorry. So we've had this market just squeeze to the upside, and then we've got into consolidation. This was really choppy, horrible price action for most of the summer. And then on Friday's candlestick, we actually had a really good run up to the 74.93 and a really strong break of that level. Just a bit of buying coming in at this point. However, if we just get a bit of a rollover to the downside, we might just get some more selling coming into this market. So a market for us to watch closely. We don't need to really drill down today as far as price is concerned. Very unlikely to get the moves today. But a bit of strength there in the Euro stocks. So if we do get that move, it could be worth considering trading. And it's something we might look on a daily time frame as well. So what we're going to do is we're going to just work in reverse and just look for these opportunities that we may be able to take today. So what we've seen is, let me go back to the daily time frame. So what we've seen is this market effectively gap to the downside. So a little bit of yen strength on the open, and then we've clearly tried to fill the gap. So below the 143.44 could represent a really good opportunity. And those of you that were able to see our daily trade watch for last Friday, released early Friday morning, was really strong about opportunities in, again, these same four markets, but below Thursday's low across the board. Those four markets, they're selling the euro dollar, the euro pound, sorry, the pound dollar, the euro yen, and the pound yen. So all of those markets, there was some really good trading in the end, actually, on Friday, where we got very, very clean cut price action that just allowed us to just get in on those markets very easily. Okay, so that is the pound yen and the euro yen. So we're just extending lower as we stand. So we'd like to, excuse me. So we'd like to continue to focus on those as opportunities. So we're going to continue to do so. So relatively clean cut. It's just we've had a little bit of a move already. So we'll go back in and let's look at the 143.44 level on a 15-minute time frame. And now we need to conduct a bit of technical analysis to see what's going on. We clear sort of devaluation, isn't it, to the downside. Let's look at it on the hourly chart. Now, we had a really strong move in the pound, and a little bit of that has unwound, but we are potentially running into levels of support at these levels. So we want to see and continue to see, these structures be, when you get a pullback, to see continuation to the downside. And we're kind of currently in that phase right now. So let's go down into a little bit more detail on this. So there we go. So what we could do is, it would be classified as a breakout trade, but if we get this market closing below the 143.14, it's a little bit lower than a 143.44, but that's just because the market has already moved, and we clearly have missed the opportunity over the last hour or so to capitalize on this little breakout to the downside. So the next opportunity would be the 143.14 level. So we can keep a close eye on that, just on the top right hand corner of this screen. So we can clearly identify now the opportunity. We can plan and prepare for it, and then we can act accordingly depending on how price unfolds. So this is the dynamic sort of stage. This is how dynamic, you kind of need to be when you're trading these markets. So get your trade set, get your trade plan organized, know exactly what you're looking to do and how you're looking to do it. So we go through the same analysis for the dollar yen, and you can see that there's a little bit of, So you can see that there's sort of a descending triangle here and a bit of a wedge with a strong biasness to the downside. And why we like these, we're looking at 15-minute time frames, is because when price interacts with these levels, you get these downward impulses, and it puts pressure on these lows because these now need to be defended. And when you get a break of these lows, you can normally get really strong explosive moves further to the downside. So that's why we're quite interested in these levels. So really, this is a straightforward one. A break below the 128.55, if it meets our criteria, would be a really good high probability opportunity to push lower. So 2 yen trades, a bit of yen strength potentially coming into the market. They both fit with the opportunities on a daily time frame. So that's what we really want to do. That allows us to stack the odds in our favor when we trade. What I'm going to do is just swap these two around, if that's okay, just because we can have the euro trades along the top and then the pound trades along the bottom, so we can manipulate this very, very easily. So let's go back to the daily time frame. It's quite a straightforward trade idea. The big trade, like I said, was below Thursday's low, which is a 1640 level, and gave us a fantastic couple of opportunities on Friday. And we're expecting continuation, but only below the 1584. So this doesn't really need any major analysis to any great extent, because that's the level that we're looking to trade. So we can price has just largely been working within this area. So a break below 1584, good opportunity to look for an opportunity to sell this market. Okay, so that's fairly straightforward. And then last one is the British pound. So we look at this in the bottom left hand corner. And the one thing that makes this market a little bit more difficult, and it's the same for the pound yen, is the fact that we've gapped lower. So So that's interesting. It just adds a degree of complexity really to the trade. So when we zoom out on a 15-minute time frame, you can see the gap to the downside, and we've really struggled to break that particular low. So you can see how this gap to the downside is a level of resistance as well at these levels. So we've really struggled to close that gap. So this is all just a gap that could potentially need to be filled. So all it does is just create a bit of a question mark when we trade. So we're getting the price action just extend lower. So just a bit of a messy picture, isn't it, when we look at this? Yeah, okay, it's been moving sideways with a slight bias to the upside, a slight bias to the upside, the expectation for this gap to fill, and then it just rolls over to the downside, makes a new low, and then sort of pulls back inside. So all in all, just quite choppy price action, really, to be fair. What we'd like to see is if we get a bit of a pullback on this level. So if we get just a nice strong pullback that fails to make a new high, it creates a lower high, and we start getting, you know, some strength coming into the dollar again, then we could look at an opportunity to sell in and around the 2900 level. So allow the market to do what it needs to do. It's kind of a slightly bullish view, followed by a really strong, fairly short over the course of 1 hour. So all the Asian session we didn't really do an awful lot, and then 1 hour we had a really strong explosive move lower, and today or in the last hour or so we're getting a really strong sort of pullback. We're sort of mitigating this move. So a little bit of indecision really across the board when we look at the pound dollar. So when we go to our trade plan then, and it is very, very important that when you trade these markets that you do understand it and have a plan for what you would like to see happen. And sometimes you get to your trading desk and those opportunities reveal themselves to you, and if as long as you can get into them with where you control your risk, and you've got a plan for how, if that trade materializes and moves in your favor, how you can stack the odds in your favor to get into the trade firstly, but then how you can manage that trade once you're in it. And that's what you'll experience here at the Live Trade Room. So we can keep an eye on these levels, and sometimes they don't perform. So you're only going to trade them if they do. So again, from a psychological perspective, we're not looking to chop and change. We're not looking to buy and sell. Hopefully this is a very coherent grounding in trading these markets. So pure and simply, we want to trade the euro pairs below the weekly low, and the exact price is there up on screen. So with the euro dollar, we're looking to trade this market below the 1584. So as this market is bouncing back, and now it looks like we're creating a new high in this market, you can see that maybe there's something significant in terms of news coming out. I'm just going to have a quick look at the news flow. Okay, so we do have manufacturing data out, very mild as far as its impact on the euro is concerned. And at 8:30, we've had a manufacturing PMI number impacting the Swiss franc, which is quite positive. 8:15, Spanish manufacturing is actually a little bit more positive than anticipated. So some manufacturing data due out. So what we'll do is we'll continue to monitor, but like we said, we're only looking to sell beneath these levels. Otherwise, it doesn't quite fit with kind of what we're wanting these markets to do. So we want the markets to perform as we expect them to perform. And like I said, if they don't perform in that way, then we always use the phrase, if in doubt, stay out. And that's very much the case. You know, if there is a question mark over the viability of the trade, then just stay out. Practice, you know, significant patience when you trade these markets, and you will be much better off for it. Sorry guys, just looking at the chat room. Hi Ian, thanks. Great to have you join us for the session. Do you expect the market to fill the gaps, and if so, what sort of time scale? Yes, ordinarily you would expect gaps to be filled. It's a phenomenon that normally at some point they do be filled. The big question, which is what you've alluded to really, Ian, is when does that happen? And you would like it to happen sooner rather than later. So really, when we look at this market here, just to give you a good example, I'll come back to those because there's no real trade just yet for us. So when we look at this market here, I'll take these off. If we were able to fill this gap, you know, over the past trading number of hours since the open, if this price action actually just pulled back to this level, I'd feel much more comfortable about the opportunity to sell it. The fact that it hasn't, it does leave you thinking, right, well, the likelihood is at some point today we're going to get the opportunity to pull back. But what I'll be looking for then is to see if it'll give us an opportunity to sell it just at a slightly higher price. So we will look to sell at this level, 29.03, because we might get a 50 pip move before we get a really strong pullback. So it's one of those tough ones. And to be fair, Ian, we don't really see this sort of bit of price action that often in the Forex markets, certainly in the majors. So it's not really a situation that we have to deal with that often. But on occasion, we just back off a little bit and go, right, well, we've gapped to the downside. We've not closed the gap. We would expect it to close normally relatively quickly. I think there's another one. Let me see if there's a good example of a gap that closed pretty quickly. I think there is. Was it the dollar CAD? Yeah, it might have been the dollar CAD. So let's look at this on a 15-minute time frame. So with this, we were looking a little bit on the bearish side. It gapped to the upside, and straight away there was a little bit of a fill of this area in here. So this gap was filled pretty quickly. So, you know, within an hour or so. And that's what you'd like to see to feel more comfortable about the potential to either buy or sell it, is when the gap has been addressed. I'm sure there's a couple of other opportunities. What other market was it? The Aussie? Yeah, so the New Zealand, if we look at just the gap, just focus on the gap. So we've gapped down, but as you can see, fairly quickly, most of that gap has been retraced. Certainly, if you roll it on another hour. So really, it's kind of a tough one. So very rarely do we get a situation like this. Where you clearly get the gap, and the market really struggles to close that gap. So now you'd see it a lot more often in other markets, but then there's sort of different nuances with different markets. So you'd expect the foreign exchange market to make an effort to close it. So the sooner we close that gap, obviously, the better. But we might get a nice move before we get it closed. So again, this would lend itself, Ian, to the reality. If we did get in below the 2900, we would not be giving this market the benefit of the doubt, and one of the reasons for that would be due to the actual gap existing. So if we capitalized on a 20 pip move to the downside and we booked in that profit, and the market started to turn around and give us sort of structural failures to the downside, I'd like to think we'd have enough about us when we trade these markets to actually get out at those levels and be a little bit more aggressive with our take profit because of that situation. So as you can see, there's a bit of strength coming into this market as we stand. So we might be closing this gap sooner rather than later. It's looking like there's the potential to do that. And it's only, what would it be, a 20 pip move to the upside from where we currently are. So this gap is not significant. It is visually, but from a price perspective, it's not massively. And we're getting a pullback across the board now. So we're still wanting to stick with our analysis. We don't want to counter trend. You know, that's not our style. If we want counter trend trades, are probably for more experienced traders. Some people that have been profitable for a long period of time can feel easier about taking counter trend trades. As far as this approach is concerned, we're wanting to practice consistency in our approach, not be chopping and changing and switching from trend trading to counter trend trading. It just might sort of create a lot of confusion. So we'd rather just focus on what are often the bigger moves, going with the market and not and really protect your capital when you trade. And those are all the skills that all profitable traders, that they all have in common. They can all do that. So yeah, hopefully that answers your question there, Ian. And you can see like the Euro Yen even gapped lower. We saw a gap, and then we filled that gap over here. We gapped down, filled the majority of that gap. I think that might be 10 pips or so. So yeah, definitely we'd like to see that gap filled if we possibly could. So let me just take this back. So look, I'll just put up the levels there for us to consider. Selling the 1584 to the downside. 2900 effectively in the pound dollar. Euro Yen selling below 128.55 and the pound yen selling below 143.14. So those are our trade opportunities, and this analysis can as long as there's no changes to these markets, and we can work with this analysis for the day. Sometimes it can take a little bit of period or a little bit of time to actually for these trades to filter out. And I suppose what we are going to be trading markets that have reduced volume just because of the bank holiday in the US and Canada. So we wouldn't be expecting, even if we did get into trades, we wouldn't be expecting big, strong, powerful moves. Get in, maybe create trade the structure, go with the trend, go with the sort of the direction of the bigger time frames, stack the odds in your favor in that way, and be quite happy to take profit as it arrives. So those are our opportunities to focus on for the session. Okay, just looking through some of the other kind of news events. Macron says that Putin's dream is dismantling of Europe. So that's quite strong words there. I'm probably sure it is, really, with the situation with NATO and the fact that with Russian exports to Europe as well, there is a dependence there on Russia. And as a result, probably opportunities that I'm sure Russia are going to try and exploit. Yeah, good morning, Ian. I hope you're keeping well. Yeah, please do. Please do. That's the whole nature behind this trading room. Any questions any of you have, feel free to post them into your chat box. We can look at even at other markets. If you guys have other markets that you're looking at. I know over the weekend a few of you were talking about the pound Swiss. So we can go and have a look at that. I did notice it gapped lower in line with a lot of the other gaps we saw in the pound. So yeah, no, feel free to use your chat box, Ian. Post any questions you might have. So what we can see is this low in here, the 25.09, we actually gapped lower. And again, pretty much retraced that gap to the downside. So what I'll do is I'll just move that just marginally so you can see the visual. So we're within a couple of pips of closing that gap. So it'd be interesting to see if this creates a double bottom or not, or if we get that eventually, if we get that rollover to the downside. Yeah, so feel free to post any questions. If any of you have any questions, then do use this time. And when we do get some moves, we'll be very, very active. It's just if we really have to trade these markets with the understanding that volumes are going to be a lot lighter than normal. So not overly surprised to get a lot of sideways moving price action. So we can look at other markets, see what opportunities might present themselves. So we've got the potential of a double bottom here, so we'll see how this market unfolds. Now, again, it was quite a useful discussion, really, because there was the suggestion from one of our traders to, looking to sell this market. And what we'd have to do straight off the bat is say, right, well, what's your directional bias? And that's very much to the downside. So the idea was to look to sell this market, which is, and look, if I show you on bigger time frames, whoops. So you can see there was kind of been this upward sort of support around these levels, and then we got a really strong break of that level. Obviously, when the Swiss franc started to strengthen dramatically, and we've got this little bit of a rollover of price action. So in terms of directional bias, absolutely great opportunity to look to sell. I don't know if Shane is online with us. Shane, if you are, perhaps you say a quick hello. I hope you don't mind me discussing it. But we would absolutely agree that we should be looking for opportunities to sell. The only problem we have from a technical perspective, is this in here. This is a bullish engulfing candlestick, and although the previous day we made a new low with this candlestick here, this came off the back of a Brexit statement from Barnier in Europe, suggesting that that Europe were very much interested in effectively a soft Brexit. So it was quite positive for the British pound, and we got a really strong reversal off these lows. And actually then this became a bullish engulfing candlestick. And straight away, that is normally a really strong bullish candlestick on which to make some decisions. Now we'd need to see follow through, which of course we never really got. And instead, price just rolled over to the downside. And now we're back at these lows. But the only problem is, in terms of an entry and an exit, was I think there was a 124 level of support that was being aimed for. But if you take this high and this low in here, at most it would represent a 1-for-1 positive risk reward on the trade, which is fine, but we'd like to stack a little bit more in our favor when we trade, if we possibly can do. So so this is quite a bit of bullish price action, and then it puts a little bit of a question mark really for the last 2 trading days, with the markets just rolling over to the downside. So that's the pound Swiss. And there's every opportunity that this market will move lower. Not for a second suggesting that this isn't potentially a good opportunity. Potentially it could be. What we are, I guess, saying is that we'd like better price action in which to get in. So if this market extended lower, for example, and we got a really strong pullback to this level, that would be a really strong opportunity to sell it at this current price. Now there is the potential for a breakout below the 25.06 if we get some volatility coming into the market, but you've still got issues to consider in terms of stop loss placement. If you're trading daily time frame, that's quite a large stop loss. Maybe you could use above today's high, for example, or above the 25.43. So you've just got a couple of issues to negotiate, but very viable opportunity to the downside. I mean, you would really like to, if we were trading these markets, I think we were away, we took a 2-week break during August, and we did see a number of moves, ironically, during that time, in a number of markets, and the pound Swiss was one of them. Also some moves in some of the dollar markets and the gold market as well. So that's always the way. When you decide to take a break is when you can get markets sort of moving relatively easily until you're back at your trading desk again, and then they can tighten up and sort of not give you that much of a fantastic opportunity. So that's the dollar Swiss. So going back to our trades then. Even though we've had a bit of a move to the upside, the trade to the downside still exists across these pairs. So these are the levels we're focusing on. If there's anyone new joining us for this. So when price gets to those levels, we are then quite interested in looking to sell all of these markets and seeing continuation to the downside. So Ian, you're saying you're struggling to work out how to calculate the correct point size whilst using a trailing stop. I know what level I want to set it at by looking at the chart, but struggle to get the right point value. Do you mean trade size? You're struggling to find the correct trade size, is it, Ian? Now, trailing stops are an interesting one. I'm not saying don't use them, but I suppose what you'll experience in this live trade room. Oh, you're not talking about the trade size itself. So, okay, sorry, let me just... You're struggling to work out how to calculate the correct point size. So the number of pips effectively are points. Once in a trade, you want to trail the price. Now, what you'll experience here, Ian, is that we will effectively be trading the price, but we won't be applying an arbitrary sort of 30 pip trailing stop or 50 pip. We won't be treating the market like that. But what we will be doing is trailing it using structures. So as soon as the structure's made, or we know that markets pull back. So whether you're buying or selling, experiencing a pullback is inevitable. But if you get your analysis right and you stack the odds in your favor and you trade those structures consistently, we'll effectively be using them as the market moves in our favor. So what I mean by that is if we're selling one of these markets and we get, roughly speaking, that kind of price action to the downside, and let's say we get in on the breakout and we identify a structural high and we have our stop loss in here, as the market is moving in our favor, we can continue to use the highs as our stop losses. Now the problem with that is you need to apply, you need to be able to see and be able to experience this move. You don't need to watch the markets completely, but you need to have an understanding of these kind of structures that are created, and this is effectively letting your winners run. And the reason why we're not going to use like an arbitrary trading stop loss, because let's say you had a 30 pip bounce off this low, you could be taken out, whereas the market could just, so 30 pips could be here just for argument's sake, and the market moves 35 pips. So we're always reluctant in applying an arbitrary number to a trading stop, because we don't know whether this pullback will be 5 pips, 10 pips or 30 pips, and that's the difficulty. I suppose if you're applying it consistently, then you're going to have some that win really nicely and others that won't, and obviously some you'll just get grazed out of. But if you work with the structures, you've just got a little bit more going for you. Yeah, I suppose to answer your question, Ian, if you're using a trailing stop, which is you determining if the market moves in your favor at 50 pips, then you placing a trailing stop off that price to actually mitigate risk and book in profit. Now it's something that a lot of traders use, but it's you arbitrarily applying a number to the pullback and what you will and won't tolerate in a pullback. And it can really work, especially if you trade trending markets. Sometimes you get the a really strong, like you might experience a 100 pip move and book in 70 pips of that, because you're allowing the opportunity for that trade to run. It's just, obviously it would be a shame as well if we were trading structures, but if you get a 10 pip move and then a 30 pip pullback and then you see the market just extend lower, then obviously you could be taken out of that trade prematurely. Yeah, so once in a trade, you want to trail the price. So exactly, so what I would like to do is to be able to calculate the distance to where you would set your stop loss and then let it run. Yeah, interesting. I suppose a way of doing that would be if you can get into the market and set the structure, and you see, on average, I guess our stop loss from a pip placement when we trade intraday is probably around 15 pips. So on average, and I suppose the pip exposure across some of the equities and the gold market and the crude oil would be a little bit more. of course, and obviously a little bit more expensive to trade. But when we're talking about foreign exchange, probably around 15 pips is effectively our exposure. So I think a 15 pip trailing stop would probably be too tight. I think I'm sure you'd probably agree. But maybe you might use potentially a multiple of that, because if a market pulls back more than 15 pips, we'll obviously be out of it. But the chance that the market, if we stack the odds in our favour, and we get solid breaks at these levels, we'd like to think we'd be covering our trade fairly effectively pretty quickly if we get the moves behind the trade. So really, to answer your question, Ian, there's nothing wrong with working with a trailing stop loss, because the one thing it'll have going for it is consistency. Where you set that limit, that pip limit or point limit, is the difficult one. And obviously, the greater the pip exposure, the more capital, or depending on how you calculate the trade size. And it depends what time frame you're trading as well. So there's just a few elements to consider. Okay, looking at end of day trading. So if stop loss is 100 pip away, I'm struggling to set trailing stop to 100 pips. Are you talking about sort of technically struggling to So you're talking about technically actually placing the trailing stop, by the sounds of it. Okay, yeah, please do give me a an example. Yeah, no problem. Right, guys, I'm very sorry to say that just looking at the time, we've got other traders over at the live trade room currently. So we have our trade plan currently up on screen. We're still looking to trade these markets beneath these lows. So we know which levels we're looking for. A little bit of obviously lack of volume, really, as you can see. So from an opportunity perspective, it looks like we're going to have to be very, very patient. What I'll do, Ian, continue to please post your question, and hopefully you can join us over at the live trade room. I'll be set up now in about 1 minute's time. So anyone that's joining us that's not currently a member of the live trade room, please do look at the description below. We're currently offering an opportunity for you to join us, and there's a 14-day free trial to get access, and as you can see, the price, if you decide to continue, is incredibly low. So we effectively have a number of live trade rooms for you to join every single day. So hopefully you can join us, and please do give a thumbs up and subscribe to the channel if you possibly can as well. So on that note, guys, I'd like to let you go for the morning. Those of you that have, if we do have any live trade room traders, you can see us through, or you can join us shortly through the live trade room webinar. So for everyone else, thank you very much for joining us. We're going to keep a close eye on these trades, and if we get those opportunities, we'll be looking to get into them. And Ian, continue to place your question, and we'll answer it very, very shortly. So for everyone here at the Live Trade Room, thanks as always for joining us. You can connect with us through our YouTube channel, so please do subscribe to the channel below and click the bell button as well, and you'll be notified when we go live. But also on Facebook, Instagram, Twitter and LinkedIn, the details are all there up on screen. So as always, thank you very much for joining us. Do take care, and we look forward to seeing you next time. From everyone here, bye for now.